Money!
What Your Bank Doesn't Tell You, a podcast by UMushroom.
Welcome everybody. Today, actually, we have a slightly different way of doing our podcast. We have a guest. It's Florian Rümmelein, and Florian actually just told me a very interesting story about his last name, what is actually a Swiss name, even though you emerged to Germany because of a very interesting reason or funny reason. Today, I'm very glad to have Florian here at the table. We are talking about quality banking instead of banks. So we both realized, or I dare to say that we both realized, that in the banking industry, about 90% of the people is left out when it comes to investing. And I'm very curious to hear how you solve the problem, or what's your vision about how to solve the problem. But before we go into that topic, I'm very curious to hear more about you, about your background, and where you're coming from. We already know you come from Germany, originally from Switzerland, but yeah,
thank you for having me. Thank you for having me. So basically quickly about myself. So my name is Florian Rümmelein, as already mentioned. I'm the CEO and one of the co-founders of Everon. So Everon is a digital wealth manager. So maybe quickly about my background. As you said, I was born in Germany. I moved to Switzerland when I was 12 years old. I went to high school here. I studied banking and finance at the University of Zurich. And I was always in touch with finances, as my dad is a private banker. So he was working for a private bank, has now his multifamily office. So it was also always a topic that interested me a lot. But also my mom. My mom is a dermatologist. So I always admired her profession because she was helping others with their health. And I kind of really enjoyed both topics. And when I started, after high school, looking out what to do, what to study, I got in touch with my professor at the University of Zurich, Thorsten Henz, and he really inspired me about the whole financial industry. So I studied banking and finance with a focus on behavioral finance. And basically while studying, I was working in the private banking industry. I was working for a single and a multifamily office. And this was also kind of where the whole idea of Everon, just emerged, because we saw that there is a big majority of the population is kind of underserviced when it comes to financial services. And I saw that a lot of, normal people approached that multifamily office and they wanted to become clients. They were interested in independent advice and kind of independent of banks, helping them with their financial wealth. And this target group, as we'll talk later on, is not really interesting to traditional private banking providers. So we decided on why can't we offer something decent to them? So basically, in one sentence, why can't normal people invest like the wealthiest ones in this world? And this is how it all started.
We completely share this judgment about how banking works. Usually, people with 10 million or more, they are we call it overbanked, because all the banks, they are fighting for these clients. But if you have less money, but still investing is a topic, then you're kind of left alone. And if you go back into the banking industry, usually banks, they have two ways of managing your money. So one way is the discretionary mandates, basically where the bank takes the money and manages for you. And then the other alternative is the advisory mandates. And with the advisory mandates, basically you as an investor, you as a client, you still have the saying in what you want to invest or in what you don't want to invest. And as you already know, UMushroom is the answer, or the digital answer to the traditional advisory business. And to me, it sounds that you are kind of the alternative for the digital or the modern answer for discretionary management.
Yes, that's true. So basically quickly about, what a family office or what a private bank normally is doing. So in general, they try to service wealthy individuals or families holistically. So they try to help them with, investing money, inheriting money, setting up a business, financing, and so on. So various topics. And normally kind of wealthy individuals get independent advice. So they kind of build up their own office, their own family office that just has the purpose of helping them with their financial situation. They are employed. So they are aligned with the interests of the people that own the money, that give the money. And therefore, kind of, we share those values. So as our background is in the private banking family office industry, we really try to provide an independent service to our clients. And yes, we use discretionary mandates because of various reasons, but we kind of try to kind of advise the client throughout the process, but we're also responsible for the execution, which has a lot of advantages. So we take care of negotiating the fees with the custodian banks we work with, where we open accounts for our clients. And the various reasons afterwards that we can touch on. But I think it's super important to understand the difference between doing something on your own means you're responsible for your own actions. Advising means you have somebody who helps to form a decision, but you then in the end always have the final decision. And with a discretionary mandate, it's mostly you define a strategy or you define something a bit more holistically, but then the wealth manager is responsible for executing everything. Is responsible for monitoring the risk and so on. So I would say it's the most luxurious version where you don't need to do a lot. You can do a lot. So there's still clients or families in a family office that are very involved when it comes to investing. But legally speaking, the wealth manager is in charge of everything.
So, but basically, you're offering the entire package to your clients. So now, my question to you, what are the banks doing wrong if they can't offer it to the broader mass of clients and just to the very rich ones? What is the issue? How can you resolve an issue which banking isn't actually taking care of?
Yeah.
So what's the...
So I think there are various reasons. So and what I see the most is that those are huge institutions, and if you have a relationship manager in front of you at your bank, in most of the cases, they are obliged to sell a certain product of the bank itself. They are, obliged to sell what the bank has in stock. And for most of the clients that come to us, they're not really looking, to speaking to a salesperson, but rather really to somebody independent who advises them, because the financial situation can be very complex. Or it could be that you inherit money, it could be that you are divorced, it could be that you, just start your your professional career and want to build up wealth. So therefore, I think banks struggle a bit, especially with smaller clients, as they don't earn a lot of money with a smaller client, because most of the banks, they charge a management fee on the assets that the client plans to invest, and the smaller the size of funds, the less money they make. So they are somehow forced to introduce things where they're able to just increase the revenue that they can make for the bank. And for larger clients, it makes sense to service them holistically, because normally you have a huge amount of money, and then if you charge a certain percentage on those assets, then it's interesting. So therefore, kind of exactly what we try to do is we try to implement a lot of technology with processes that can be standardized or digitalized, and are kind of costing a lot of money to traditional providers, and kind of then being able to offer access already at lower amounts of assets. And then it makes sense for us as well, because we have a scalable setup with a lot of technology in place. So in the end, we don't have a huge amount of costs with every single client that comes to us.
So basically, if I summarize it correctly, there is an overhead which is not that big in your case in comparison to banks. So banks, they need to make a lot of money to finance all the stuff and the infrastructure they are having in place. And then secondly, you're claiming that for the banks, it's more expensive actually to have an infrastructure, an IT setup, which is really state of the art. Given if you do a slight adjustment in your IT, then usually it's already a big thing, because your entire IT landscape is already kind of tremendous.
Yeah, exactly. So I think what we need to add is, I think, a bank is organized in very different areas, and most of the clients that have, I don't know, 500,000 or less are treated as retail clients. So therefore, the bank is just basically just differing as well, the offering towards the different types of clients. And what we try to do is we try to break down the costs that banks have, which don't allow them to offer a bit more, interesting investment opportunities for that, retail segment in theory.
Okay.
Yeah.
Basically more efficient and more transparent when it comes to investment solution.
But I think also the one important point to add here is that, if you go to an external asset manager or wealth manager as we are, they are independent. So they don't sell any products from other providers. So we are also paid based on the success or based on the development of the funds of our clients.
Okay.
So we are very well aligned. Nobody earns anything at Everon if a client invests to a specific instrument, or it's our interest that the funds of our clients grow and not that we sell anything. So I think also how employees are paid is also a bit different than.
So basically you earn money or you have a performance fee on the assets you're managing in this sense?
So in most of the cases, we have a management fee on the assets under management. So that means if the assets increase, we earn more. If the assets decrease, we earn less. So there are different styles also, clients where, a performance fee might make sense, but performance fee could also encourage the wealth manager to invest a bit more aggressively. So therefore, most of our clients have a standard management fee. Which in most of the cases, by the way, I think there was just a very nice article published on SRF at the weekend about costs when you trade on your own. I don't know if you read the article.
Didn't see, no.
But it's super interesting because even if you trade on your own, in most of the cases you would pay more than if you go to a wealth manager, and especially now to Everon, because we try to come up with the pricing structure that is very lean, that is negotiated with the bank directly. And therefore, a wealth manager can also be a benefit cost-wise. Not a lot of people think about it, but it can be a huge advantage.
No, I agree with you. In the end, it's usually, or what we observe, it's usually that investors or clients, for them, it's not either or. It's kind of one part is managed by the bank, and maybe one part you want to invest by yourself because you have certain ideas. And then, but our observation is, and we put a lot of effort in this field as well, is it depends a lot, or you can optimize a lot when it comes to execution of trades. But yes, you're right. Sometimes when you have a package, then the package is better than the individual parts. But hearing you talking, so we kind of agree how we see the banking industry, the shortcomings, how things can be improved for investors. But tell me, just out of the box, how would you envision a very modern banking industry? Or how should Zurich or Switzerland, the banking industry in Switzerland, look in the perfect world of today?
Okay, it's a very good question. So I think they're different topics. So I think towards the end client, I think there are still a lot of providers in the market that have a very standardized, expensive offering where the client has basically no say. So it's basically choose 1, 2, 3, and then you have to choose it, and then it's basically discussion finished. So I think traditional providers have to become a bit more flexible, and I think also we see this now in our business that clients want to have a say when it comes to investing their money. They want to understand what is going on. They want to have an impact as well, and saying, I have a specific focus or specific interest. Could we implement it? What's your opinion on it? Because I think in the end, it's important that people, think about how to invest. And I think you're doing a very good job here, that people are able to inform themselves about investing. But in most of the cases, we still see that people are afraid of making their own decisions, especially with larger amounts of money. The second thing in general, I think, is that banks, think in different segments. And I think this is a very bad thing. I understand it just financially wise for the traditional providers in the market, but we experienced now a couple of times with clients that, just invested a bit of money. And then they were so happy that they, increased the amount by 10, 20 times. And if you would go to a bank and say, look, I'm willing to invest 50,000 Swiss francs, then most likely the answer will be, okay, here, one of the solutions, choose one of them. But if you come and say, look, I have 5 million Swiss francs, then they will start to, would you like to have a coffee? Can we invite you here and there? So I think this is sometimes, players in the industry have a very short-term focus. And I believe that this has to change as well a bit. So I think again, I think involving the individual more when it comes to making a decision, and then also servicing them in a bit more, equally way, or of saying everybody, as you would go to a doctor, you hope to be treated in a very similar way, irrespective of how much you earn or how much you're worth. And this is a bit of what we see has to change in the industry.
And it's very interesting that you're using this comparison to the health industry. You mentioned at the very beginning your mother is a doctor.
I'm biased, yeah.
but you are using this comparison as well a lot, because usually if you have something, then you first Google, what the issue could be. If your elbow is hurting or whatever, then you Google. And the very same should happen, in our opinion, also in the banking industry or in the finance industry. So if you have an appointment with your bank, you go prepared. You use, for example, UMushroom, Everon, or whoever to make you smart in order to have a much better discussion with your bank.
Exactly.
But it's very interesting to hear that you see a future financial industry still with banks. So this might quiet many people out there that you believe that we still need banks these days.
Why I believe we still need banks? So I think, banks are also doing a good job. So I think their business is very complex, so they do a lot of things. And, I think we are in touch with banks every single day. I think even if you use a neobank, they're also a bank. They also have a banking license. And I think in the end, this is not really the problem. I think the problem is more when it comes to additional services that banks provide in addition to, payments, that you always have, if you're not very well informed or very wealthy, you always have, I would say, a certain disadvantage, or because you don't have a lot of leverage when you go to a bank. Let's say you would like to buy some real estate. And then normally when clients approach us, clients, at Everon ask, I would like to buy this real estate and so on. Can you help me regarding financing? Then if we approach a bank, we have a leverage because we have a lot of clients that are booked at the bank, so we can negotiate the interest rates. But if an individual goes, what's the leverage? Or the leverage is just, okay, I've provided A, B, C, so I need to find my own way. And if I want to get a loan from a traditional bank I'm currently booked with, it's super difficult. So I think it's more that problem, or it's more the problem of maybe a misalignment of information or of leverage that you might have. And I think, so how we see the future, I think there can be an ecosystem of new providers in the market and traditional. For instance, Everon now, we just decided now to partner with UBS as a custodian bank because a lot of clients asked us about it. So it's super interesting that they said, but I know UBS and I would like to have my funds at UBS. And in the end, we as a wealth manager, we just want to make sure that our clients have the best conditions at the custodian bank. So therefore, I think there can be, it could be a very nice ecosystem if we all open up and try to work together. And I think this is happening. So when we founded the company, it was very, very difficult to start working with banks, but now it's getting way easier, and banks are also approaching us, which is very nice.
No, we share this view on the financial industry that it should be an ecosystem, basically a mushroom. That's the reason why we are called UMushroom. And also we believe that the banks, they are taking a very important role, and you mentioned it as well when it comes to infrastructure. And this shouldn't be neglected. And of course, there are some efficiencies or banks which are not that efficient when it comes to investment advisory or discretionary management, especially of the smaller clients. Also, what you mentioned that you collaborate, for example, with UBS for the custody of the investments. That's also what we realize, and that's the reason why we are not a broker, because we rather want people to keep their funds or their money with the banks they are already banking these days, and basically use an additional service to enhance their situation.
Exactly. So I think that's what the external asset manager does, or I think they're always working with different banks. They negotiate the fees with them, but in the end, you're not directly in touch with the bank. You're always in touch with the wealth manager, who's your, point of access in case of any question. But kind of the bank provides the infrastructure itself. And I think every bank has a bit of, advantages and disadvantages. So if you go to a very big bank as UBS, then, they will, allow you certain things that a smaller regional bank will just not, or because they don't have the infrastructure in place. And also when we talk about, foreign clients wanting to become clients in Switzerland, you also need a bank that, allows clients from different jurisdictions and so on. And I think, therefore, I don't really see an issue of, collaborating with the bank.
Yeah, absolutely. One other topic is ESG, or sustainable investing. And usually all banks and even external asset managers, the entire industry is talking about it. But this is a term which didn't jump at me when I looked at your webpage. So what's your opinion about sustainable investing?
Yeah. So I think it's a super interesting topic. Actually, a lot of our clients are investing in a sustainable way. We, I think we are a bit careful when it comes to advertising sustainability, because I think there are a lot of providers in the market that try to do greenwashing. And when we have a client that approaches us and says, I want to invest in a very sustainable way, then we normally ask the client, what is sustainability to you? Or because there is not a common sense of what is sustainability in the market. We have, different data providers for ESG data, and they say different things. So therefore, we try to kind of implement sustainability whenever possible. So we, by default, exclude certain industries, and we have a certain, process already within our portfolio management. We to overweight those companies. But again, I think we always go back to the question of what is sustainability for you. As an example, we had this discussion with one client talking about Nestlé. So for somebody, Nestlé is a sustainable company, for somebody not. And we just saw that, there's a bit of an issue with sustainability, just looking at it, and just saying, I want sustainability, because normally a lot of big companies out there in the market, they have sustainability ratings, but they cost something. And smaller companies, in most of the cases, don't have sustainability ratings. So you're also having a small bias towards large cap companies, the blue stocks in this world, and you neglect a lot of those small cap companies that drive a lot of growth, and they can also be sustainable. So therefore we said we tried to answer those questions within a discussion with a client and not use it as a huge banner on our webpage to basically use it to advertise our services.
It's almost boring on how many points we agree, but that's also my experience from banking, that when it comes to investing for a pension fund, for them it's very easy, because they just pick a sustainable benchmark and they invest according to this benchmark. But they don't question that much what is behind.
True.
But when an individual is investing, usually every individual, as you mentioned, has a different opinion what's sustainable and what not. And in our view, it goes much more into the direction of investing according to your very personal values, instead of this is good and this is bad, or here I have a rating and here I don't have a rating. So that it really an investment makes sense. Or is in line with your lifestyle in the end.
I would completely, agree on that, because I think a lot of clients, sometimes also an ethical discussion, is Tesla a sustainable company or not? So there's so many things, and in the end, I think it's a very personal topic. And as I said at the beginning, so I think the beauty that we have, every single mandate that we offer at Everon, for sure, we also have, certain investment styles that we offer to our clients, but a client can really impact on how the money should be invested. So if we have a client who says, I don't want to invest in those specific companies, it takes us, some seconds to exclude them. And also we try to invest as directly as possible. So we mostly try to avoid funds because lack of transparency and so on with the fund itself. And therefore, I think clients have the chance to really see what is in their portfolio, which is great for us and for the end client.
Yeah, but there are plenty of very good asset managers out there, plenty of boutiques as well. So I think it would be a bit tricky to call it intransparent.
I think when it comes to sustainability, I think it's just our experience. We saw that for a lot of clients, if you have a fund, the fund has a rating again, Then the question is now, which companies are within that fund? Some of the funds don't need to tell you every single position. So therefore, we realized that for most of the clients that are super interested in that topic, they just prefer to be invested directly into the single companies, especially it's more on the equity side. because they just have control over where their money is invested.
Yeah, I think in the end it depends as well. How much do you want to, how much you have an opinion, how much you really want to put into the topic.
True.
Yeah. Again, potentially a solution including both versions makes most sense as an investor.
Agree, yeah.
It was very interesting having you here, hearing your opinions about the financial market, about how banks could improve, how we could even further enhance the collaboration or the ecosystem within the financial industry, especially here in Switzerland, but also in other European countries. So we spoke about the importance of ecosystems, and in this respect, I also want to mention that Everon and UMushroom, we are collaborating. So you find Everon as well on UMushroom. And if you want to learn even more about Everon, I'm sure they are in good hands on your end as well.
Sure. In case anybody has a question or would like to understand a bit more about what we are doing, then reach out to us on our webpage, and we're happy to answer all the questions that you might have when it comes to building growth and investing.
Super. Thank you very much. Thanks to all of you. If you have any questions, as always, reach out to hello@umushroom.com. See you next time.
Money!
What Your Bank Doesn't Tell You, a podcast by UMushroom.